J asked, is this for accredited investors only? I'll use that as a segue to talk about this slide. The answer is going to be yes. You have to be an accredited investor. So who's a fit for this? There are rules of thumb. As many of you have heard us talk about, there's no hard and fast rules here. And we have clients at both ends of the spectrum on all of the strategies that we offer. We have trusts that are as small as $60,000. We have trusts that are as large as $400 million. We have solar clients who are making as little as $100,000 a year. And we have solar clients who are making $12 million a year. With oil and gas, again, there's no hard and fast rule. If you're making $100,000 a year, you may decide you want to pursue this for the returns plus the modest tax savings. But what we find is that in general, the folks who are most interested in and excited about this are high income earners. And we're setting a pretty low bar there. We're talking about people earning, let's say, $300,000 per year. That could be earned income from a W-2 job, RSUs from a tech job. It could be business earnings from a business that you run, if you're a business owner or a professional who owns their own practice, let's say a doctor, a dentist, a lawyer. But it can offset any kind of income. Praful asked, can we use this to offset our IRA to Roth conversion? The answer is yes. That's just another kind of income. And the point here, and we'll talk about this in detail, oil and gas is throwing off depreciation. Depreciation is a deduction that anyone can use against any type of income. There are some limitations that we'll talk about, but if you have income, then this can help. Who's especially a fit? Well, at this time of year, it's everybody. Everyone who has that kind of income. Solar may be off the table, so this is great. Even if it's earlier in the year, though, if you're someone who doesn't want to spend 100 hours on material participation or who doesn't want the regulatory headache of keeping track of that sort of thing, then oil and gas might be a fit for you. Even earlier in the year. Yeah, you want to talk about it?
One thing I want to add. So we get a lot of people who are on H-1B visa and they are interested in solar, but they cannot execute solar because they cannot set up another entity and put hours into it. So oil and gas here is the right fit for them, so they can take advantage of something that can be easily executed and they don't have to set up any entity, as you mentioned, and they don't have to put in any hours. Now, who's not a fit? So very clearly, not an accredited investor. That's very important. You have to be an accredited investor to be a part of this. And the second point is individual who have already used up their depreciation benefits. Now, with oil and gas, as Jeff has mentioned, there are no credits. It's depreciation that's coming. Now, the depreciation, when you are writing off earned income, W-2, you are subject to this thing called access business loss limitation, which is 305K. So you can write off, if you're single, you can write off 305K worth of income in a single calendar year. Or if you're married filing jointly, then you can write off 610K worth of income in a single calendar year, which means other than the charitable deductions, all the deductions that you take from different venues, solar, oil and gas combined, you cannot take more than 610K worth of losses. So the limitation here is if someone is thinking, they have $1 million worth of income and they can get a $900,000 worth of deduction, well, that's not possible. The constraint here is that you are limited. If you are writing off W-2, I want to specifically call out, if you are a business owner, you have active business income, you're not subject to that. But if you are writing off active income W-2, then you are subject to access business loss 610K, which means you cannot take more depreciation than that.